Hello, everybody, and welcome to Finalizing Your Sales Strategy, the third webinar in the Commercial Insurance Advantage program. Today, we're going to touch base on what we've gone over before and putting it into the final strategy that you're going to use to go out and start to make sales. So, let's just start at the beginning. First, to touch back on the qualifying or targeting your potential markets, we need to take a look exactly a little bit deeper because we started off by essentially going after the markets that are, favorable for the carriers that you have. But there are other factors that you may want to take into consideration when you're qualifying your markets that you want to particularly go after in terms of business classes to sell. So here are some factors that a study by Marshberry came out with that seem to get some pretty popular, I guess, the majority of producers in the review section had commented favorably on this, so I decided to share it. One of the things that you want to take into account as you look down here is geographic territory, for example. So, part of the percentages that make up, enough percentage to pursue would be, are they in an area that you can service or sell? Next section is niche industry. Is this a particular industry that you can hone in on, or is it something that you won't be able to particularly capitalize on more in the future? Access to decision maker, for example, that's a huge factor here according to this report. And nothing can frustrate you more than going through a whole sales process with somebody, coming to the final end of your presentation, and then them saying, well, there's one more person I need to check with, and then I'm sure we'll be able to move forward. And then, of course, they come back and say, well, they decided not to. They're long-term friends with the agent that we're currently with. So these are things that you want to take into consideration in your targeting of business. For example, if you were to go after manufacturing plants, your access to the decision maker may be more difficult than if you were to go after, say, like flower shops, because a flower shop owner is usually working the front desk, at least in my experience. So, again, these are things that you just want to take into account. If you notice at the bottom, obviously, if you added all these up, it would equal 100%, and you would have to at least have 70% in order to pursue a particular class of business to target. So, this is something I just want you to see. Take a screenshot, or we'll be willing to, get you a copy of this if you'd like to use it in your assessment as to what types of business classes you want to go after. But hopefully, this also proves useful for you. Okay, we've qualified the product and we've decided on the classes of business as we touched on in the first webinar. Let's talk about the person. It's time to actually sell the proposal to the individual. And going back to the very first interview that we had with the person, we need to start picking up on and uncovering the reasons why this person is going to buy insurance. So, everybody has four core qualities, I guess, or four core reasons for buying from you and or buying from anybody. And these four reasons are coverage, service, price, and relationship. So coverage is obviously the policy coverages. Some people might find that very important. Service is obviously the service that you can provide that customer as an insurance agency or as a producer. Price is price. It's the thing that, obviously the premium. And then relationship is kind of something where it's either how much the person likes you or dislikes or likes their current agent. And that's something that is very important. So let's look at all these factors and how they stack up. The first thing to realize is that you're going to have to investigate and find out what is it that how does this person buy? How do they determine whether or not they're going to buy? And what makes up their, I guess, four core reasons. So if you look at the top left here, this person is highly driven by service. Maybe they had a instance in the past where they had a claim and it wasn't handled appropriately, or every time they needed to add or remove a vehicle, it took the person, the older producer, 3 days to get back to them. And they're just really fed up. Now, interestingly enough, in this example, I have the relationship as a low factor, which is probably, it would probably be a high factor actually, because they'd probably be mad at their current agent or agency if this is the case. But maybe they're just a service driven individual. In any case, during the interview, during the quote process, it's important that you determine what core factors motivate this person to buy. Price is a fourth of the factor, and then coverage and relationship are the other two. Um, let's look at the other two. The one on the right looks like the main factor is relationship. So we'll look at in a second here about personality types, but this is the type of person who really wants to, feel like they've got someone who has their back. They're a team player with somebody, and maybe they really don't like their current agent, or maybe they really like their current agent. Obviously, if relationship's important to this person, their relationship with their current agent is vital. So it's extremely important for you as the producer to find out what is their relationship with their current agent. And by the way, that is why, as we mentioned in the previous webinars, that's why we call it the interview and not just the getting your questions answered or filling out the application questions. It's actually an interview, and you're interviewing them. You're trying to find out what is it that makes this person decide to buy, and what are their pain points, so that you can tailor the presentation or the proposal to that person's pain points and core motivators for buying. So again, super important. This whole section is kind of where rubber meets the road here. Let's look at the very bottom one. Now, this I threw in here because this is what most producers decide or feel that most people, I guess, are made up of. So most producers feel, or salespeople, if you ask them, they feel or they lead in with, price, price, price. If I can get a lower price, they'll move. If I can get a cheaper rate, they'll switch over to me. It won't take you too long out there making calls and adding up your numbers to realize, well, geez, I cannot figure this out. I kept coming in with a lower price, but I still kept getting beat out half the time. Well, that's because to everybody, it's not always price driven. If you look at up here, for example, even if 25% or the exact quarter is made up of price, or this person here 25%, you've still got 75% more reasons why a person could buy over price. Now, if this is the fact right here where half of its price, you still have 50% that could sway them over to you. Now, again, it's 50-50 at that point. But what's important is this. A person may be 50% price. Heck, a person may be 80% price. But don't assume they are, because if you do, you might be missing out on what actually motivates that person to switch. So when you're going into your presentation, or I guess the interview, rather than focusing the interview on, I can get you a better price on the quote, etc., etc., maybe that's a good lead-in sentence. In fact, it's a really good lead-in sentence to get the interview, because most of people have some makeup of price. You don't know if they've got a makeup of relationship or not, or of service, but usually they have some factor of price. It's a good way to get the interview. But during the presentation, during the proposal, during the interview, don't lead them into your belief that price is the most important thing. Definitely ask them questions and try to get to the root of what is their core buying reasons, because otherwise you may end up missing some very important factors that could end up getting you the sale. I did have instances where, especially after I took CIC classes, I would sell policies that were more expensive than the current agents. Now, granted, I was able to find coverage gaps that I felt were coverage areas where coverage I felt was lacking in their current policy, and as I was able to really sell those. I didn't want to say like I scared them or anything, but I kind of scared them into thinking that if they didn't take these coverages, they're really missing out. And I didn't undermine their current agent in a blatant terms, but I did kind of make it through my proposal apparent that I knew more than their current agent, obviously by presenting the way I did, so that I felt like I tipped relationship in my favor. I felt I tipped coverage in my favor. And then I was easily able to promote the services of our agency actually through a one-page flyer that I put in the proposal that explained all the ways that we serve our customers and that. So I was able to get, 3 of the 4 core buying points in my favor. So even if price was slightly higher, I was able to sell a few of those, which otherwise I feel like I wouldn't have been able to sell those. So the interview is crucial. The process of getting the questions is crucial. It's the only time you have to find out what their core buying reasons are. Okay, let's talk about each individual and what makes up their personalities or their behavioral traits, depending on the, I guess, wheel or grid or graph or chart that you adhere to. They all basically boil down to the same thing. There's 4 different types of person or personality cores. So there's 4 cores that make up a person's behavioral traits. I don't want to confuse it with the previous stuff. Those were 4 core reasons for buying. Okay, this is 4 behavioral trait cores. And if we look at each of these 4 types of people, everyone has a mix of these, but usually there's one of these 4 that make that is dominant in a person, okay? So let's take a look at these types of people. Pragmatics, I'm going to use an example, a very extreme example of each of these to kind of illustrate. A pragmatic would be like Donald Trump. Very direct, very opinionated, very to the point, very assertive. They don't want to be bogged down in details. They don't really care as much about team playing. They care a lot more about the task at hand. So you wouldn't want to try to sell a pragmatic on a bunch of details and graphs and charts. Let's take the exact opposite. So let's bounce all the way over here to the thinker. The thinker would be like Spock, someone who's very detail oriented, very factual, very logical. They want to see all the details. They're going to ask you questions about every coverage and every little bell and whistle, as I like to call them in the BOP policy. This person, if you try to just jump to the premium page, give them the premium, tell them it's a good deal, and think that they're going to make a quick decision and go, you are going to be missing the boat. You're going to need to really come as prepared as possible. Have all your ducks in a row and make sure you know the coverages and you can point out in a very cautious manner and a conservative manner the coverages. You don't want to, necessarily try to dazzle this person. They're very much more driven to logic. You can usually pick out the difference if you're talking to someone between a Donald Trump and a Spock. So it's just important during that interview process that you're trying to identify what's the core buying decision, what makes this person's core buying decision, and then what's the buying style, what's this person's personality style. Let's take a look at the middle 2 here. Persuader and a facilitator. A persuader, I got to think of a more current example, but a persuader would be like a Richard Simmons or like somebody that's very like flashy and excitable. They want to be like part of the team. They want to impress you. They want to be impressed. Make sure you have a nice proposal. They want something that gives them wow factor when they see it. They're very wordy and optimistic. I mean, they're thinking the glass half full. They want to make this happen. They big picture, big thinkers. This type of person, yeah, you want to a relationship's a huge important factor. Same thing with the facilitator. We'll talk about in a second. The relationship is a very important factor for these 2 middle people. Okay. These 2 people on the outside aren't necessarily as much relationship driven, especially the thinker. Other than what you can do for them in terms of task. But these people in the middle, the persuaders and the facilitators, they're very people, extroverted, social, and they want to be, team and that sort of thing. So the persuader, again, picture this person that you want to make sure and dream with. Hey, when your business gets in a few years, when your business is this big, I'm going to be there for you. I'm going to have your back. You give me a call, I'm going to be right there with you. I'm going to make sure I get you the coverages you need. Building that relationship and thinking big with them. A facilitator actually the majority of the population statistically is made up of facilitators. These are the people that usually are kind of like, they're very service driven. In fact, usually when we hire for people in most insurance agencies, when they hire CSRs, they're hiring facilitators. These are people that just like to help. They like to be part of the team. They're very empathetic. They're very cooperative. They don't like to rock the boat, though. Okay, they don't want to offend you. The same thing is true for the persuader. They're people. They're social. They don't want to offend you. They want to be team players. The problem with a facilitator and a persuader is a lot of times these people will tell you, yeah, I'm interested, even when they're not. Or maybe they'll say, I really got to think about this. Let me get back to you. Because they flat out can't tell you no. They sometimes try to sugarcoat things so that they don't offend you or confront you. These are very difficult people to sometimes read in terms of their core buying style or core buying thing. You need to make sure you get their core buying factors out in the initial interview, because when you go to the proposal, they won't want to offend you, so they're not going to tip their cards at that point. So if you're trying to rebuttal a persuader or a facilitator in the proposal, you're toast, because they probably won't let you on to what the actual reason is, because they don't want you to know that, because they don't want you to try to rebuttal that. They want to walk away if they want to say no, and they're probably not going to want to offend you. So facilitator, how do you sell to a facilitator? Well, you want to make sure that you're not pushy. Okay, they don't like pushy. They want to make sure that you don't just try to bedazzle them, but that you conservatively go through it and you give the impression that you're warm and supportive and understanding and cautious a little bit and conservative, but that you walk them through it, answer their questions, and they're and you'll be in great shape with a facilitator usually in those situations. Now, going back to my point earlier, though, a pragmatic and a thinker, they'll tell you usually flat out exactly why they don't want to buy. They won't mince words, and they'll just flat out tell you if your rebuttal sucks. Usually they just tell you like it is. Again, everyone has a varying degree of these things, so nobody's just 100% pragmatic, other than maybe Donald Trump. No one's just a thinker, other than like Spock. But everyone has some sort of a mix of these. You need to find out what their dominant thing is, so that you can know how you want to present that proposal. Because as you probably know, you probably present based off of whatever your buying style is. And if you're someone like me that likes to get down to the point, and I try to propose something to someone who wants to see a bunch of charts and graphs, you're going to end up getting shot down a bunch, as I was in the beginning, because I wasn't going through enough detail with those people. And I couldn't figure out why I could sell to this type of person but not that type. Just important that you taper your style to their buying style. It'll really help in the success in the final sale. Now, dealing with objections, as I mentioned before, if you're trying to rebuttal or deal with an objection in the actual proposal, you're probably behind and you're trying to fight an uphill battle. It's very, very important that when you're in the interview, you're uncovering the pains. You're finding their buying reasons, the four core buying reasons, whether it's service, coverage, price, relationship. You're finding the buying style. You're trying to create your proposal to what they will receive the best. Okay. And then again in the interview, you're trying to uncover pains. What don't they like about their current situation? So that way, when you're doing the proposal, you're tapering it toward their style, you're accentuating their core reasons for buying, and then you're definitely accentuating the pains that they have and how you're solving the pains, or how you're fixing those pains. If you do those things, most of the time, especially if you in the beginning prefaced everything with making sure they would buy from you if you met certain objectives, then you shouldn't have to deal with many objections at the end. It should just be a matter of you walked them right through the process. It was a target market. You should be able to close them with a high success rate. Now, if you get an objection though, Just make sure that you listen completely to what they're saying. You actually hear what they're saying, not just what they're telling you, but what maybe you got to dig deeper because maybe it's a facilitator or a persuader who's not actually telling you what they really think because they don't want to offend you. But then don't try to like I guess promote what they're saying as true when they object, but understand. Say, I understand why that might be confusing, or I understand why you might have a question there. Let me try to put this in a different way, or I guess rebuttal them in that sort of a way. Just don't validate their objection. A lot of times people say that by saying, well, that's a good point, or you're right. You don't want to do that because then you just validated them, their reason for not buying. And then again, just kind of active listening response, and then if you're kind of getting down to specifics as to what's holding them back. This is pretty basic. You can read this, but I think the main thing for this purpose is being proactive on those other items so that when you get to the proposal, you're not dealing with a lot of objections. Okay, so you've kind of I guess we've walked through the process. Again, this is based off of the interviews that we've had with the successful agencies, my own personal experience, and also through classes like Dynamics of Sales. This is boiling it all down into basically a 3-part webinar. Now you've got the nuts and bolts to be able to actually get out there and start calling on businesses. It's really not complicated other than those things. If you just work on those things, that's blocking and tackling. If you can do those things, you can have a pretty good game. So now we need to talk about, how many calls do you need to make per week to be successful? Ultimately, it's just a game of numbers. If you know your closing ratio, then you know how many people you need to talk to in order to hit your goals. So the math is actually pretty simple when you just backwards figure it. But I did create a spreadsheet that I don't have a snazzy title for, and we didn't copyright or anything. So I'm just calling it my commercial call calculator for now so someone doesn't rip it off. But let me just go ahead and bring it up here real quick. Okay, so this is just basically going to calculate how many calls monthly and weekly you need to make, assuming there's 4 weeks per month, based off of your commission goal. So that's ultimately what it boils down to, right? I mean, how much money do you want to make per month? So let's just say that in this example, the producer wants to make $3,000 of commission per month. Okay, so we need to have some factors here, and these you need to do based off of the average commission in your agency. So let's say that the average commission is 14%. And what's your average premium per account? Well, this is important, obviously. If you're going after, general contractors or, that just want a general liability policy, that's $500. That's going to take you a long time to hit your goal. Let's say we're going after something more in the range of like, auto mechanic, and the average premium's like $5,000. And let's say your quote closing ratio, if you quote a mechanic based on your, carriers and your target markets, if you're quoting a mechanic, let's say your closing ratio is 50%. Well, actually, it should be a lot better than that if you're going after a target. Let's say it's 65%. And your interview closing ratio. How many people do you need to talk to and do that initial step in the door before they're willing to let you actually get an interview and get a quote? Let's say that 1 out of every 10 people that you walk into with your business card or flyer and say, can I have an interview with you? Can I get a quote? Let's say 1 out of 10 say yes, which is 10%. This means that to hit your goal of $3,000 of monthly commission, you would need to make 66 calls a month, which is 16 calls a week, which really isn't too bad if you think about it. What we do in our office, what we found to be effective is we would just tell our producers, okay, pick your 3 days a week that you're going to be making calls. Depending on the industry, a lot of times it's Tuesday, Wednesday, Thursday. Put 5 business cards in your pocket or 5 flyers, and don't come back to the office until you've handed them all out. Head out in the morning, come into the office after you've handed them all out. Simple as that. Um, that's really, it's a game of numbers. What happens though is 66 calls a month, that seems like a lot. And what happens is if you just say, okay, I'm going to make 66 calls this month, well, you procrastinate to the last week and you don't get them all in. Or you don't keep track and you think you've made that many calls, but really it always usually works out that you didn't actually make that many. And then your numbers start slipping and you can't really find out why. But this is just an easy way for you to kind of calculate how many calls you need to make a week, and an easy way for make sure that you hit those so that your numbers don't slip. Now, if your numbers start slipping, for example, like let's say the average premium per account isn't 5,000. Let's say you find out, well, geez, I thought it'd be 5,000, but it turns out it's only 4,000. Well, then you need to bump up your weekly calls, or you need to go after a different class of business. There's a reason why some producers that want to make, $5,000 a month go after accounts that are no less than like $8,000 or $10,000, because then you're back down to your 5 calls a day. Now that being said, it's just a hustle. If you want to make more money, you just need to make more calls per week. It just depends on how many doors you can walk in. It's doable. We've had producers that have actually made 40 plus calls a week. It's very doable. It's just a game of numbers. You're just walking out, going into businesses and handing your stuff out. Now, I've given us a pretty lenient closing ratio because really, if you're hitting your target markets, and especially have assessed your classes of business on like that first slide we saw, where you're trying to determine, those factors for pursuing a class of business, you should be closer to the 70% range. So, obviously, one more example I'll show you here. Let's lower this down again to like a 4,000. And let's just say that the average premium is, let's say $800. Okay. Take a look at this, please, because this is a big trap. There are so many agents or producers in the commercial lines field that go after things like beauty shops. And they write things like general contractor's liability. Every time you write a minimum premium BOP, which is $500 in most cases, or a GL for $300 in most cases, what you've done is you've drug your average premium per account down. So even if you sell 3 beauty shops and, one mechanic, you may have drug your average premium per account down to like $800. Or let's just say for the heck of it, $1,000. Oops, that one more zero will make a big difference here. 102 calls a week is a lot of calls a week, and this is when people start to get frustrated that they're not making money, and where you can make a lot more money in personal lines. It is very important because obviously some of these BOPs, especially, they just don't pay the bills. You have to do so much volume in order to actually make it work. So I would encourage you to make sure that you look at your class of business that you're targeting and make sure you understand what is the average premium per account on that class of business. And I would encourage you to try to keep it up to where you don't have to make 102 calls a week in order to hit your goal. You can find out that information from the carrier. The carrier usually will tell you what the average account size is. If you're not sure, if you're just kind of getting out there for the first time, the carrier whose business you're target marketing will be able to tell you that information. So this is super important. Let us know if you want us to run these calculations for you, and we're happy to do that. Now's when rubber meets the road, so maybe after this webinar we can run these for you and give you an idea about where you want to be based off of your interview closing ratio, your quote closing ratio. And this is something we'd like for you to check in with us, once a week on after you kind of get up and going, because you're going to get more information on your interview closing ratio and your quote closing ratio, etc., as you get out there and start actually, calling on businesses. Okay, so the final phase in the series here is basically putting together a final action plan. What are you going to do now? I guess it's go time. It's time to start making some money. No more class, which gosh, I hate class personally. So it's like let's get out of class, start making some money. And it's like it's a snowball. The more money you make, the more money you make after that, because you're pumped up after you make a sale. More sales come after those sales. It's just awesome. So let's find out when are you going to make your final sales strategy. So when are you going to actually start hitting the road, and determining how many calls per week you need to make. You need to put a date down in this box. So I would just take whatever handy piece of paper you have, or if you're at your computer, obviously, type it in. What day is this going down? Because if you don't put that day down, it's always going to be tomorrow. So put a day down. When you making this happen, establish your time management goals. Figure out how you're going to keep track of your prospects, how you're going to make sure that you hit those 5 calls a day, or 10 calls a day, or 20 calls a day. When and how are you going to do that? Which days are you going to go out? Let's get those established. Review one key area a week. So we've covered a lot of things. There's obviously things you can cover through other sales books and courses. But even if you just take this webinar series, for example, there's things to keep you busy for a while. Practicing people's buying styles and identifying them, practicing people's buying reasons and identifying those, going over common objections that you've received, and practicing, what worked and what didn't work, and focusing on that. Devoting 15 minutes a day to planning and mental rehearsal. That kind of goes in with what I was just saying. What worked, let's practice that. What didn't work, why? Let's practice a reason or an alternative, and let's do that. But if you don't set aside actual time every day, whether it's right after lunch, so you've got a set time, or right before lunch, or whatever, a lot of times we just put this off because we get busy. You've got to dedicate the time to actually do that sort of stuff. It's kind of like bring your head above water for a little bit, take a look at where you're going before you hit back into things, because we can obviously get lost in the fray. What are your goals, and what day are you going to have those established by? Again, put this down as a date. Otherwise it'll always be tomorrow. What are your actual goals? Don't just get out there and start blazing. As tempting as it is, you need to have a direction, obviously, so that you make sure that you can, that you're working smarter and not just harder. Establish your key numbers weekly. Reassess things like, is the average account size actually the average account size that I thought it was going to be? Is my quote closing ratio? Hey, maybe I'm only 5%. I got to walk into more doors in order to get an interview. That's cool. Bump up your weekly numbers then, but you've got to be able to keep track of that in order to know. Otherwise, you're going to wonder why you're not hitting your goal after a few months. Write out your most common objections and answers. We kind of talked a lot about that. Tapes, books, courses, there's plenty of them out there. I'm not a big believer in motivational speaking, but I didn't listen to motivational speaking when I was out hitting the streets, because I don't care how outgoing, how rocking of a salesperson you are. Everybody's a little uncomfortable walking in front of somebody that they've never met for the first time and asking for something. I mean, it's human nature. Most people, unless by the sociological definition of antisocial, unless you're actually antisocial in the psychological definition, it is slightly uncomfortable for you to walk up to someone, ask for something, and not feel a little uneasy. So tapes, books, courses, these are all good. Going out with someone is actually kind of cool. That kind of goes in with networking. But if there's another producer that you can ride with and just alternate, you each have 10 business cards to hand out that day, and you hit 20 businesses, and you just take turns and trade war stories back in the car before you go to the next one. That's sometimes that worked for me anyway. I liked doing that when I had the opportunity. Networking, calling each other, we're here for you. We can put you in touch with other producers that are going through the same thing. You learn from other people faster than if you just go it on your own. And then making a commitment to change today. This is the key. So, again, everything's always going to be tomorrow unless you actually make your commitment to do things today. And that's what we want to do, is actually get out there now. This wasn't a course to learn what other people are doing. This was a course to find out, hopefully, how you can get out there and be as successful as some of the other commercial producers that we've seen. I have personal stories of agents in our network, our MIA group, that individually put on $700,000 of commercial lines in 1 year. That was phenomenal. I mean, most producers can do, 300 to 600,000, but we have some rock stars, and these were the people that I talked to. What went into this webinar series was based off of what these people were doing. So hopefully, by taking what they're doing and putting it into a method that you can use and tailor towards your own individual style, you can be as successful as they are. And if you have any questions, we're always happy to help. We're happy to put you in touch with anybody that can help. And we'll do everything we can possible. But anyway, I hope this was beneficial and look forward to talking with you all soon. Thanks.